G'day and welcome to Motley Fool Stocks in Focus, our YouTube and podcast series where we pretty much give you the down low from one of our rockstar analysts here at the Motley Fool on what they think about a business. They do a bit about it, some of the pros and cons, and of course, I will put them on the spot and work out whether they reckon there's a chance it's going to be market beating over the next 5 or so years. Now, before we do that, my usual disclaimers I've got to throw out there. Firstly, this is general advice, not personal advice. In other words, we'll tell you what we think about a company. You've got to decide. That's the personal bit. You've got to decide whether or not it's right for you. The other thing is we're recording these at a point in time. Now, the views of our team may and probably will change from time to time based on the company, based on the price, based on whatever else is going on. So just please bear in mind if you're listening to or watching this later after the fact, our views may well have changed since then. So it's a point in time. We are long-term investors at the Motley Fool, so probably not a huge chance that they change particularly quickly or particularly regularly, but just please be aware of that if you are watching it after the date. Speaking of which, the Motley Fool Money podcast, if you're listening to it, thanks for doing that. Make sure you are subscribed to it. If you're not, if you're watching this on YouTube, jump over to the Motley Fool Money podcast, subscribe to that feed so you get this every week, plus 2 other episodes we do. And if you're on the podcast or you just simply found this one on YouTube, please do subscribe and like this video. Why? It's good for our egos. I always like that. Most importantly, it helps other people find the video. And if you do subscribe, you hit the notification bell. Every time we do one of these, we do Stocks in Focus, Stock of the Month. We do What I've Been Reading. We do some YouTube live stuff. We do Motley Fool TV. Lots of great stuff on the channel. We've revitalized it over the past month or so. So if you're not already there, please go. If you are watching on there, please do hit that subscribe button and make sure you hit the notification bell. All right, that's all out of the way. So now I get to do the good stuff. Let's introduce Kate Lee. Kate, g'day.
Hi, how are you?
Mate, I'm very well. Thanks for spending some time with us. Thank you for sharing your thoughts on, I think it is the largest company on the ASX, the Commonwealth Bank of Australia. We all know it as CommBank or CBA. Tell us, well, I was going to say, tell us what CommBank does. I think we all know, but give us a bit more detail on Commonwealth Bank.
I immigrated to Australia in 2016. And on the very second day of arrival, I went to the city and opened my bank account with CBA.
There you go.
This is the company that doesn't need introduction. I am now one of the 18 million customers of
Wow.
CBA in Australia, which is roughly 3 out of 4 others in the country, right? So they do everything, like their everyday banking in Australia. They're big in customer like home loans, insurance, wealth management, business banking, everything. In
Mhm.
terms of revenue breakdown, they make about half of their revenue in the retail banking and home lending business. And then, of course, they are fairly big in the business lending as well. Globally, in terms of market cap, which is a bit tricky, I'll get to that because, given the share price performance over the past, actually a couple of years actually now,
Mm, mm.
the bank now ranks within the top 10 largest banks
Wow.
globally.
Okay.
As of today, it's actually sixth, but this number changed day in, day out. So I'll just say within top 10. So that's kind of, everything we need to know in a nutshell. So that's enough of introduction for Commonwealth Bank of
Yeah, it
Australia.
makes sense. Makes sense. Hey, happy 10th anniversary then, by the way. I didn't realize you got here in 2016. Almost there, 9 years this year, and hopefully coming up to the 10th very soon. You're right. Everyone knows CBA. I think we know the logo, we know the business, plenty of stuff about it. People older than you, Kate, will remember the little Commonwealth Bank money boxes. The most was got as kids when we were in primary school. The Dolomites accounts and the Commonwealth Bank, the Martin Place building was a money box we all got. So it has definitely been part of the Australian fabric for many, many years. That's the business, and you've done a great job. I didn't realize. Let's go to the investment case then, because there is the company and there is the investment. They're always two different things. They're linked inextricably, but they're not the same. So let's do both sides of this particular coin, Kate, if we can. What are some of the reasons that an investor might consider investing in CBA shares?
CBA has been a like darling of the stock market for the past couple of years, and there are valid reason for that. Number one reason I explained half of that already in the introduction. It's
Mm,
dominant market position. It's the go-to bank for many Australians. Um, the bank control in terms of assets roughly a quarter of Australia's
mm,
banking assets, which is great. Like the total asset of $1.3 trillion of CBA. That's obviously the largest among the big four. Now, what's interesting is actually Australia's banking sector, as a sector, is one of the most concentrated among developed markets.
mm.
So, like big four banks in country, like CBA, Westpac, NAB, and ANZ, they together hold about 80% of the country's total banking assets, as compared to in the countries like US, Europe. It's usually maybe top five banks manage about like half of the total assets.
Right.
So from that angle, it might be one of the reasons that could explain the valuation premium that we're getting as a whole sector, banking sector in the country, and then especially CBA in particular. And then second reason is the bank is also highly profitable.
Mm.
CBA again, like if I try to compare across the global banking, like across the all the leading banks in the U.S. and Europe, CBA's ROE, return on equity, is in mid-teens, about 13%. Um, but then that's just I think they're like in terms of ROE as well, they're within I think top 10 or if not 20. So it's
Mm.
just right after the banks like JP Morgan, Morgan Stanley, Goldman Sachs, they are, up there. But then other than those companies, CBA's ROE is very high.
Mm.
And then their profit margin on the housing loans, it's just very profitable bank. And then third reason is again, it has a strong capital, strong balance sheet. Actually, in terms of numbers, I think it's a as I research this company, right, I totally understand why so many investors, pension funds love to have these shares. It just checks a lot of bank boxes. And also, lastly, dividends, right? Even after such a strong run in the share price, its dividend yield currently is nearly 3%, fully franked. So it's fairly high for that, banks is also offering the stability and predictability. And then their payout ratio is still at about 70% to 80%, which means it can sustain this rate of payout going forward, which is also good news. So I think those are four reasons that I would I would like to invest in CBA bank shares today.
Very nice. That's four pretty strong ones, by the way. That a dividend yield pay ratio is pretty impressive, given, as you say, the price. We may talk about valuation, I suspect. Let's do the other side of that coin and talk about reasons why investors might not invest in CBA.
Yes, the valuation is the biggest. No, I mean, like the banks, it's very strong. It's good. It's good to bank. It's not gonna go bankrupt anytime soon. We know all that, but then there's a price to pay, right? And then
Mm.
the gap to the rest of the world is just so big.
Mm.
I'll share some numbers, right? So CBA is right now trading at about 20 times, above 20 times, I think, in terms of PE, price to earnings multiple, and over three times its book value. Um, if I put in the context, US banks usually trade in the low teens, like 12, 13 times as compared to 20 for the CBA. In terms of price to book, they are between 1 to 2 times. So I understand, it's a good bank, it has a probably higher ROE, which is great, clean balance sheet and everything, but I just cannot swallow this level of valuations. And then if it's just a valuation matter alone, my theory when I usually do the investing, right? I say if everything's clean, everything's so good, but the valuation is the only problem, I usually go forward in my case.
Right.
But the second issue I have with the bank is the limited upside, right? Like, being the largest bank, I mentioned 3 out of 4 that already have an account with CBA. This is similar to like the companies like Tesla. You're the dominant player in a certain area. Then to grow, you really have to go beyond borders. Of course, CBA is doing a great job in New Zealand, but then beyond that, like
Mm.
whereas could you go to grow further to justify that valuation? And then lastly, I guess the economic situation. I mean, it's really maybe that's it's interesting because in economic uncertainty right now, in some sense, because it's uncertain, investors like to flock into shares like CBA because of that predictability, stability. But then if the whole economy, I'm not trying to predict, where we are heading for, but then if we are going into downturn as a whole, as an economy, obviously the banking sector would not be immune to this overall downturn. And then it's not just about CBA, but then any shares with stretched valuations would be very tricky to invest in my view. So those are 3 points that might kind of let me down on
Yeah.
this investing idea.
Very nicely put. I should say too, by the way, you mentioned the global banks. CBA is much more expensive than our big other three of the big four banks here at home. So it's not just at a bank premium in
True.
Australia in general, although Australian banks tend to be a little bit more expensive than the foreign ones, but CBA is
Yeah.
much more expensive than the other three of the big four as well.
Yep.
Hey, all right, let's. I think I might know which way you're going to lean on this one, but I'm open to being surprised. So, again, this is not a formal recommendation, I should say. If you're new to this series, we have recommendations that we have at the Motley Fool. Those formal recommendations, we actually share one a month in stock of the month, so it's worth hanging around on the YouTube channel for that. But so this is not a formal recommendation. I'm not going to ask you whether it's a buy or a sell, Kate. But what I'm going to ask you is what you think of the likelihood of this being a market-beating investment over the next, say, 5 years or so.
Um, I think it depends. Well, okay,
Mm.
my answer is I don't think it will be market beating from here. I've
Of
just
course, you
made
might
a
say that.
small choice to just answer you right away. But then I think it depends on the like, which age group you are in or which, what kind of risk appetite you have. Like
Mm,
if say you're a retiree and you find I don't need too much of side. You just want like, that consistent dividend you know, payout,
mm, mm.
then I kind of understand why this investment may have merit on your portfolio. But in my case, I think let's put it this way: this is good bank, solid bank, safest, bit expensive, but good dividend payer. But I just see there might be other opportunities out there which may give you a higher upside. I guess that's how I would sum it up.
Yeah, it is very, very nicely placed. Commonwealth Bank of Australia, the biggest bank in the country, the biggest company in the country, but maybe not one, at least in Kate's view, for your investment, unless you have certain particular needs that don't rely on the total return being market beat. Is that fair to say, Kate?
Yeah, that's my stance.
Beautiful, beautiful. Thank you very much. Hey, Phil, thanks for spending some time with us. If you're listening, thanks for listening on the Motley Fool Money podcast. Thanks for joining us on YouTube. We'll be back in both of those places very, very soon, but we appreciate you spending a bit of time with us. Kate, thank you for sharing your expertise with our viewers and listeners as well. And until we chat again, full on.